Hi everyone. Today is Tuesday, May the 20th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're starting, as usual, taking a look at the ES. I do want to see what's going on the calendar today. Some Fed speakers auditioning for their next role. And then, a couple of people are really interested in what the bill and the bond announcements are. So we'll see, right? Not a ton here, but towards the end of the week, we do have a few things that are going to be a little bit more interesting for us to take a look at. All right, so let's start with the E-mini S&P. We've got an opening range that is approximately 15 points wide or so. We broke down, and so the opening candlestick high at 59.9350 is the high. It presents the high of the day. We could easily have a little mean reversion. Yesterday we did a grinding move to the upside. I still believe that shorts are driving this market higher, and we'll just see how much pain they can endure. So dips are still buy zones. Notice yesterday's trading event pushed us below the 63 simple moving average, and then by the open we were up above it, signaling another buy zone, support recaptured, also the 50% range of the 4-hour Fibonacci that we are watching, right? It's this one right here, high to low, came in just under that 50% range, and then as soon as it recovered off that edge, 5,919, we were off to the races. And so now we're sitting a little bit stalled out. So implied volatility showing 59.4450 on the low side, 60.16 on the upside. Yesterday's chart, we went right into 59.74, 59.74. Yeah, before we faded. That was the implied vol for that day, and we faded off that edge. Really, really nice formation overall, and it came in to hit my lower targets in the overnight. I was looking for 54, and it came in just shy of that, maybe 54.50. So what are we staring down today? Well, it is a buy the dip formation, but we are in mean reversion, and so ideally the bounce event is going to be at 5,945, right? If we can come into that area, a fair bit of buyers will show up, in my estimation, and so that would be the short target down. As long as we continue to make lower lows, that target still holds. The problem is we got some persnickety buyers underneath here between 59, 57, and you can see this number 59.64. Look at how long we've been dancing around this zone. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. So there's a battle going on right here. So we'll see what gives. My suspicion is, we move from the top of the volatility implied vol move to the bottom of the implied vol move, and then we can move back to the upside. If per happenstance I am incorrect, that would mean we would need to get up over 5,974, and that will send us back into the opening range. Long action should take over at that 59.74, with the first target only 6 points away at 59.79 to 59.80, and then 5,993. Implied vol move up at 60.16. The weekly implied volatility has shifted up. It was down here at 60.16. And so what I want to do is clone this and put it here as a reminder that said it was the initial weekly implied volatility. Traders are sort of rolling up their calls at this juncture, but I still think this 60-15, 60-17 ends up being the top end of the range. All right, momentum mixed, right? Downside pressure, upside pressure, reversion to the mean. That usually means that candlesticks will retrace each other, and you can see the battleground here. Literally, we've been in a 10-point move for 10 hours or 15-point move for 10 hours. It's been exhausting to look at, especially since I've been up since 3 a.m. Eastern. Okay, let's take a look at the NQ. Opening range is about 70 points wide or so. That's not bad, right? It's not bad. We have a Fibonacci retracement for the last market structure in the NQ that has us at a high right in the middle of the opening range. That's a potential target if this chart begins to bounce. That's 21,533. We did break structure, but immediately collapsed into the middle. That normally sends us back to the 50% range, which is underneath the implied vol move for the day. High level for the implied vol move, 21,674. Low for the implied vol move, 21,352. So we should stay in that range. The moving average is flat. Notice price action has not paid attention to this, and that should be a key for us. So we know we can break this zone easily and move potentially further than the bottom of the range. That gives us the low of yesterday's opening candlestick formation, 21,283, thereabouts. That could be the region where we go, all right, if it breaks here, get out of the way, let it build a new support structure, and then get yourself involved from that perspective. All right, so upper targets, 21,500 to 21,564, and potentially 21,674. I don't know how that'll go. And then lower targets, we're going to see, I think the possibility exists for 21,373, which is the high of yesterday's opening range. And then below that, we've got the implied vol move, we've got heavy congestion, all the way down into potentially 21,290. All right, let's take a look at the YM. Of course, these are the Dow Futures. Monster candlestick that just opened up here. The ES and the NQ, you can see, are not behaving in the same way, but we are right in the opening range. Take a look at this. Old resistance, new support, tested it. A lot of buyers showing pressure there, but momentum is fairly negative, so they're moving up into a resistance zone. Where is that zone? A potential structure break here at 42,900. As long as we reject that 42,900 area, we should stair step back down into a sideways formation. And we're really trying to figure out what's going on right now. It's very, very sideways. So that being said, trend is up, momentum is mixed, right? From this high and this high, we can see that momentum is drifting to the north, to the south. And so the loss of the base of the opening range at 42,856 or 42,860, something like that, we're going to have shorting action that could easily bring us back to 42,760. Above 42,900, we have some sticky bits that take us up to 42,950, and then just over 43,000. The implied vol moves still very far away. The ones who have shorted this range have done very, very nicely if they did the iron condor, short iron condor. Let's take a look at micro Bitcoin. Yesterday's implied vol move came right into the weekly formation and then absolutely collapsed. They're trying to do it again. This is the daily implied volatility move. Bounced over it, but failed. That tells me that we are still inside this market structure here. Let's go to the 4-hour and build it properly. Let's do this. Let's go high, low. We can see that 50% range looks like about 104,860. All right. So that is just above the implied vol move of the day. I suspect we do the same mean reversion. Notice 63, the 63 moving average. The chart is simply not paying attention to it at this juncture. It's flat. We hold, and then we break, and then we breach. So it tells me what we're sitting in is a big, fat range. What does that give us? We've lost the low of the opening range. We just left the implied volatility move several hours ago, and just like yesterday, I expect we fade down into the bottom of the range. And so I like the short action here. I'm sort of ignoring this 63, but I think a good place to take profit would be 104,670 with lower edges at the low of the hourly open candlestick of yesterday. Notice we are still in range and in value, right? So we could go to the bottom of the range. We could go to the top of the range. My suspicion is that because we rejected the initial implied volatility, we should fade into deeper support. Let's take a look at oil. I think we're in the rollover contract. Let me double check. Checking from another chart. 62.10. Yes, indeed. Okay, so what do we see here? Right? Tight opening range. Moving average essentially flat. Again, not a ton of obedience to this moving average. Tight range shows price action above and below, but we are inside of the move. You know what? Let me create a line here. I got to make this yellow. Right, that's our opening range high-low. We are literally inside of the range of yesterday. Okay, what's going to happen here? No clue. But I would suspect that we might know that if we get to the top of this range, again, no releases right now, but if we get to the top of the range around 62.80, we need to reject that area, or we could have a move right back up to 63.44. If we lose the low of the opening range, we could come to 61.76 and bounce back. We're building a megaphone, right? Yesterday, megaphone. Today, megaphone. Day before yesterday, megaphone. So Friday, Monday, Tuesday, megaphone patterns suggest we let it expand to the edges. As soon as it begins its retrace, we can trade it back to the middle of the range. I don't like the thought of trading in here. I think it's very messy. Candlesticks really retracing each other, and technicals are just suggesting that we need to sit on our hands right there. All right. Gold. Gold did a great job of bouncing off the implied vol move, which was really around 32.20, and it did that. Today, it's doing the same thing for today's moves, right? Opening range right here, implied volatility move, 3211 is the zone. Now, listen, if you're under an upward 50 and the overall work is sideways, you're going to see some sort of bottoming event, some sort of retest of the formation. If you said, hey, I'm going to buy the implied vol, and you've got negative momentum, and you're underneath an upward moving average, the first bounce into that moving average should give you a zone that would make you go, you know what, I better get out of there. And interestingly enough, this chart is also sitting right inside of its opening candlestick for yesterday. A lot of things look very rangy right here, a move in either direction, clearly possible. So, don't diddle in the middle. Today might be a day that we have to sit on our hands, right? So, that being said, the high of 3,233 in the opening candlestick formation is currently giving us a support zone. So you could say, hey, listen, I'm going to buy it right here at 32.38, and I'm going to make my stop 32.33. If that's what you want to do, have at it. You've got a structural move. It breaks the trend. The problem is it's a big fat sloppy mess, and we're sitting inside of the prior formations. So the buy zone could send you just a few points to the north, maybe 6 points to the north, or it goes straight up into 32.55. My suspicion is that it gets noisy and falls back down here, but we just turned positive on the momentum. We're back up above the 63, so pullbacks are likely to be buy zones. Let's take a look at SPY. Opening range for the SPY, implied vol move still at 600. We have a structure break yesterday, but now we're sitting back inside structure. So, what does the trader want to see? Ideally, the dips are buys. Momentum, a little bit negative. It's trying to find support. Bottom of the implied vol move is where I would look for a long at around 588 to 589. Don't just leave your limit order right here, though, because easily we could slip down into this support edge, right? I mean, lower lows, higher highs. There's a megaphone here. Just be careful. Be careful. Could we fill the gap? Yes. 594.82 is an upside target all the way to 597. All right, that's essentially what we'll be looking at as the chart moves forward today. SPY is really in a sideways motion. My thought is that it's essentially sideways. But it's a grinding upward sideways for sure. Okay, let's see if we lose these highs today or if we break higher and grind even more. I think traders are mostly short here. Big movers are mostly short, and they're caught flat-footed, so I think the charts actually will move up, but into resistance. So here's the gap down. For the Qs, above 520.60, $520.60, we have a potential gap fill into 522. We've got an up to flat moving average, little bit of negative momentum, but clearly upward trend. Dips are buy zones. Super trend is bullish here also. The bottom of the implied volatility move for the Qs, 516.34. The top of the range, 524. Easily something we could bounce around and rattle through, right? We are inside of the trading range of yesterday, and that makes for a little bit of noise, okay? Just very noisy. All right, listen, that's it for me. I'll see you on the streams, and take care. Dr. Brett Steenbarger is going to be on Top Step TV at noon. I'm going to be asking him about how to identify self-limiting beliefs. I'm going to ask him about operating on Copilot, potentially living life asleep, and what's our problem with avoiding discomfort. And so it's going to be very, very interesting. That's at 12 noon today on Top Step TV's YouTube channel. So hope I get to see you guys there. All right, take care.